Welcome back to Markets News now. Well, a plunge in Chinese share markets capped a miserable day for Asian equities today. A renewed slide in oil prices gave investors few reasons to reassess a darkening outlook for the global economy. Take a look at the numbers. Japanese stock indices tumbling more than 2% as investors took profits. The Nikkei share average falling by 2.4%. Fears of a global slowdown prompted sharp selling of shares in Japan's shipping companies. Hong Kong shares also falling. Please excuse the green arrows on that ORAD. A sharp sell-off in mainland China markets in afternoon trade added to selling pressure. The Hang Seng Index ending down 2.5%. Mainland China stocks were hit by yet another late bout of panic selling. The Shanghai Composite Index losing 6.4%. Right, the picture in the United States, where Wall Street sold off yesterday, pulled lower by further weakness in oil prices as energy shares led declines. Oil prices falling 6% on concerns over oversupply after news that Iraq's output reached a record last month. The Dow Jones Industrial Average falling by 1.2%, the S&P 500 losing 1.5%, and the Nasdaq Composite Index dropping by 1.5% as well. All right, let's go further into those markets now. Take a look at what's happening in Europe. The FTSE is down by 0.9%, the CAC falling by 0.8%. The DAX is also lower by a margin of 0.7%. Here at home, the All Share Index 0.25% weaker. Industrials down by 0.2%. Financials 1.3% in the red. So the Resources Index is up by a margin of 0.8%. The Gold Index jumping 9.1%. The Platinum Index 3.6% stronger. All right, and look at that gold price at the moment, $1,114 an ounce. Platinum $866, and the Brent crude oil price $29.20 a barrel. That's just below 30. Okay, your rand against the major currencies at the moment: to the dollar 16.56, to the pound 23.50, and 17.94 against the euro. There's a quick look now at what your BRICS currencies are doing at the moment. Well, we're going to talk to Gary Booysen now. Just get a look at what's happening with the market developments. Gary from Rand Swiss, thanks very much indeed for talking to us.
Good to be here.
All right, let's start off with Bheki Sibiya. I mean, he's the chairperson or chairman of cement giant PPC. He steps down and we see the shares hitting its lowest level in 12 years.
Yeah, I think investors looking at PPC's history have become used to changes in the board and in senior management. I think the slide in PPC is really, I mean, it's been a steady slide since a trading update that came out yesterday, which really just highlighted the pressure the sector is under at the moment. I mean, obviously they've pushed through some tariffs on imports from Pakistan, but it's still facing, without an increase in at least the infrastructure spending by government, still facing a very, very difficult time locally. Yeah,
people are just not building, I mean, like you say, outside of the government context.
Yeah, outside there's a lot of pressure. I mean, the management strategy at the moment is to move up into Africa, and they're targeting about 40% of revenue coming out of Africa, I think, 2017, 2018. But of course, with the slide in oil prices that we've seen, it's put a lot of those economies under pressure as well. So you've seen that slide in the share price, I mean, down from almost 20 Rand a couple of months ago. We're hovering just below 12 at the moment.
You speak about oil prices here. Emerging market currencies, I see, still taking a beating. We saw that showing us its face in the Asian trading this morning. Another drop in the oil prices, and of course you've got this regional equity sell-off as well.
Yeah, it's interesting how, I suppose, traders look at it, because they almost see the oil price coming off. They assume that means slower global growth, and they start selling off equity markets. When, if you actually look into the reason for the oil price slide, it's very much a supply glut. It's not really a demand-driven story. The slide from $100 a barrel really started with the collapse of the OPEC cartel and the increasing in production from Saudi Arabia. So, looking at it, I mean, we did get that's almost, it looked like a bear squeeze. It was, short covering. We know traders are very short oil at the moment, and it looked like those positions unwinding, where we got the little bounce on Friday, and we got a little bit of follow through on Monday. But with the supply glut still in evidence, with rig counts in Canada and the US still fairly elevated and not falling, It looks like the supply glut's here to stay, and we could potentially see more pressure for the oil price.
And it's interesting to see what happens with bouts of sentiment. I mean, you go to $32 the one day, you're down to $29.86 the next day. That's quite interesting.
Yeah, definitely. I mean, you often see an increase in volatility also when a market's beginning to turn, because you're just not quite certain where you should be pricing this. Again, as we mentioned, it's very much the supply glut, but also the growth that you can expect, the increased sort of consumer spending coming out of the US based on low oil prices is incredibly positive for economies and GDP growth. I mean, I'd hate to think what would be happening in South Africa now if we were facing an oil price of $100 a barrel plus a weakening rand.
Quite. Again, we see gold re-establishing itself. I mean, here you have, we just took a look at the gold price now, quite impressive indeed. And again, it's the same old story, investors just moving away from that risk, the risky areas. What do you think about the metals performance at the moment?
Yeah, we can see again, with the whole concept of a risk-off sell-off, like we're getting, you do see a movement into the safe haven assets. So you see a movement into dollar, yen, and obviously gold. Looking at gold, I mean, it's still fairly suppressed in dollar terms. If you look at it from its high that it made it was just before 2011, around $1,700 an ounce. But again, if we look at it in rand terms, I mean, if you look at something like the ABSA New Gold ETF, which tracks the rand price of gold at record highs, I mean, your Kruger rands these days are costing you just under 19,000 rand for one Kruger. So you've seen it operating as an effective hedge, which is what gold should operate as in any portfolio. Yeah. But again, you know, gold's always an interesting one because it is, as you mentioned, just so sentiment driven. And you know, obviously with the fear that's moving into it, you see the gold price rising. But again, there's a good argument to be made also for you know, gold as an investment into a rising economic growth. I mean, especially out of China and India, which demand a lot of gold as GDP and per capita income rises.
And you see companies like Harmony Gold smiling, don't you?
No, of course. I mean, all our local gold miners and I suppose international gold miners as well, they're all leveraged to the gold price. So obviously the higher the gold price gets, the wider the operating margin becomes and the more attractive they can become as an investment.
All right. Very quickly, so the possible regulation of over-the-top services being discussed in Parliament today. You have services like WhatsApp and Skype allowing messaging and calls to be made. Of course, these have revenue implications for the big players in this industry, you know, like your MTNs and so forth. What do you make of what's happening in Parliament today? Where's it going?
You know, it's always difficult to see how these things are going to play out. I mean, you can understand why the big telco operators are so opposed to it. I mean, we've seen, you know, voice revenue declining. We've seen, you know, the SMS revenue declining as well. And you've seen an increase in data revenue. But again, the data as a product for a cell phone provider is a low margin product. And you're not going to make as much of a WhatsApp, the data use of a WhatsApp as you are of an SMS. Again, I mean, I was reading something by Arthur Goldstuck this morning as well, saying, you know, the timing of this is very interesting and the speed at which this has come to be heard. Yeah. But overall, I mean, you can understand, I don't think anything's going to come of it because, you know, essentially, if we do start regulating WhatsApp and increasing the prices, the people that are going to be affected most is the consumer. And at this stage, you know, I can't see government really, you know, wanting to take more money out of the consumer's pocket.
Indeed. All right, that's where we leave it. Gary Booysen from Rand Swiss, thanks for coming in.